Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's video, Anthony Power and I are pleased to welcome John Belizaire back to the program. He's the CEO of Soluna Holdings, and they just came out with their Q3 results. We're going to be talking about earnings, outlook, and strategy in today's video. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Soluna and what you thought about their results. With that being said, let's get into today's interview. Okay, guys, away we go. We've got John Belizaire, the CEO of Soluna Holdings, back on the program, hot off the heels of Q3 earnings and our Texas Tour 2.0, where we actually got to go see the Dorothy facility up close and personal. So, John, thank you so much for organizing the tour and for making the time today. Great to see you.
Great to see you guys too. You don't look worse for the wear for such a long trip driving through giant Texas and seeing our site. But I'm so glad you were able to make it. I hope it helped to crystallize what we do at Soluna, and you got some touring of the U.S. in the process as well.
It was a great day to go, John. Actually, we went to your site on the first day of the tour. We just covered Childress, and really they are contrasting sites. But one thing that stands out every site is that sheer size of each site, irrespective of how many megawatts are at the site. The pictures that we see on the presentations don't do any justice until you've physically been there and started walking around the site. And as I said on many of the podcasts last week, I wouldn't like to walk around some of those sites because they're large sites. You know, some are like 500-600 acre sites in terms of size. Yours is a big site as well. A lot of things going on there. You've got that energization now at Dorothy 1, Dorothy 2, so it's earning you the revenues as we speak now. So plenty of things to see there. And if people haven't watched that podcast, please, switch on to it. It was a great podcast, and it's doing really well when you compared to seeing some of the miners what we also visited last week. So really, really well done for that, John, letting us visit there. And also a big thanks to the team there at Silverton as well, because without a great team, you're not going to be anywhere. And for us to go there and be welcomed so well by all the team, all the people on the site coming up to us and saying hello, and obviously understanding what we were doing, that makes our job even easier.
Yeah. Well, thank you for that. And I agree. The podcast you put together after the trip was fantastic. It really does touch on the key things that really tell our story and make us unique in the market.
We're going to get into a number of those topics in a second here. I did want to touch on Q3 earnings, but just as a nice segue from the intro there, we drove a lot of miles across Texas, and we were astounded by the number of wind farms, specifically the ones that were not turning. They were actually turned down because the power wasn't required. So I want to get into that theme throughout today's presentation, John. A lot of your peers really clamoring for these HPC AI sites. You guys literally have renewables calling you to help offset some of the power. So a very unique business model here. First and foremost, though, you just put out Q3 earnings. So can you talk us through some of the top line numbers, highlights for the 3-month period?
Yeah, sure. Talking about Q3 I'd probably take this whole podcast, but I'll do my best to keep it brief. From a financial highlights perspective, I'd say Q3 was a transformational quarter for the company, both financially, operationally, and strategically, to be honest. From a financial highlights perspective, we announced 36% increase in revenue for the quarter, 28% increase in gross profits as these sites scale and become operational and fully ramped. And in our cash position has increased significantly. It's a record level, probably more cash than we've had since I've been CEO, and for a long period of time when we were investing a lot in mining. And so that really positions the company very well for the next couple of years as we begin to build out our business and capitalize on a number of operational and strategic opportunities. What Q3 did for me, and I think I hope investors see this, is that it definitely proves that our model scales. We are able to attract top-tier partners to come and deploy their machines at our sites. And as you guys have seen, they're quite large sites, professionally run, high quality, and the service levels that we deliver are best in class. And so that helps to attract some of the top players in the space. And we have delivered some real financial momentum. Q3, when you take out all of the Michigas related to financings and whatnot, then really look at the core business, you'll see that we actually had a adjusted EBITDA that was profitable after many quarters of not being so. And that just really sings to me as the company is in a completely different place. I like to say Soluna this is the new Soluna, and we've got a lot going for us right now.
That's great to see, John. You mentioned the revenue up 36%. You mentioned the gross margin. I think it jumped from 19 to 28%. Can you tell us about some of the most, impactful operational decisions behind that improvement, and how sustainable are these margins as you scale going forwards?
There are a couple of things we did. We've been highly focused on ensuring that customers have the best quality miners in our facilities. On our own proprietary mining side, we started doing fleet upgrades on D1B, but you won't see it as much in Q3. You'll probably see that more in Q4, but most of our customers were also doing that. We brought in a huge new fleet of miners from some mining equipment from some very large miners last quarter that improved profits as well. And then we implemented a whole series of maintenance and operational improvements, both on the software side, the operating side, consolidating different buildings where we had perhaps a mix of underperforming miners. We would consolidate them into several buildings to maximize space and then bringing more capacity. And then we focused a lot on deployment as fast as possible, bringing up new megawatts. And so some of that profit increase is driven by new contracts coming into D1A, into Sophie. And in the coming quarters, as D2 ramps, it will begin to contribute its own profit advantage to the business and revenue growth as well. So a mix of things, all of them very consciously focused on improving our operational efficiencies and profit.
Thank you. You've got record cash reserves. You've got this $100 million credit facility available. What sort of hurdles or KPIs will determine how quickly you deploy that capital, and what level of return should investors expect from flagship projects like Cati 1?
Well, our projects continue to perform well. If you look at our earnings power, we kind of walk you through the unit economics of our projects. But just to remind folks, we generate in mid-30s% IRR on our projects, or another way to think about it is cash on cash returns of 30%, 48 months to flip the projects where we share 50% of the profits. And so what that affords us is these assets have great cash flows, and we can use those cash flows to bring in debt, and that debt helps us to scale, reducing our cost of capital over time. That's the purpose of the Generate facility. That last quarter, the deal that we struck allowed us to refinance some of our projects, which essentially means we unlocked cash that was equity, replaced it with debt, distributed that equity to the partners, and then we're using that capital to then build more projects, right? So we're recycling that money to build more projects. That also affords us the ability to accelerate that flip. As more cash gets distributed out, you get closer to those IRR flip or returns. And when you get closer to those returns, we get closer to our profit share. And then we still leave the door open to buy back shares in those projects to increase our portion of the cash flows minus the debt, of course. So what that does is it allows the company to have clear visibility into our scaling plan. That's the plan we've put out that shows the multi-year growth of our projects. We have this concept called doubling inside of Soluna. So every year we want to double our total assets under management and operating. So 24 we had 75, and this year we'll have close to 123 megawatts. And so we want to keep doubling that next year. We want to try to get to 300 and 600, et cetera. So from a return profile, you'll start to see more of our projects generating that 35% cash on cash return. We'll have more megawatts spinning, and we'll be able to deploy our equity capital side by side with debt with a very healthy return. And what's interesting to note, again, I turn folks' attention to the unit economics content we've put out. Soluna's return is higher because we have that flip, right? So if you just look at it as our projects in a vanilla investment, it's a 35% cash on cash return, which is fantastic. I've heard peers talk about that in some of their other businesses, and everybody would invest in that any day of the week. But we actually are closer to the 45 to 50% because we have that carried interest in those projects. And we see that as a long-term value that we get every time we return a product to shovel readiness.
Now, final question from me from the earnings point of view is you had strong operational performance, but the net loss did sort of widen a little due to some of the finance related adjustments. What can shareholders watch for in the coming quarters that may signal a clearer path to maybe more consistent project or more consistent positive earnings?
Yeah. So there's two ways to look at our earnings. When I look at our financials being produced by the auditors, they have to be produced a certain way. It's GAAP. But what happens is sometimes what's happening in a particular quarter, we had a lot of fees, warrant repricings or evaluations, consent fees associated with the capital that we raised, and we raised a healthy amount of capital in the quarter. That's not really the core business of the company. Those are financing activities. If you look at the core business of the company, what you see is that we did have a profitable quarter once you take out all of that, those sort of one-time or non-recurring, what we call special charges, if you will. And that's in the Q3 presentation that we put out. We'd like you to take a closer look at that. And that's the real picture of the business. And we want to keep showing that real picture because we expect that to continue to see the underlying business be very profitable and begin to see the scaling elements of that. And then if we're doing financings or some type of transaction in the quarter, we'll do our best to mitigate the things that come with that, but that's not always in our control. So I think investors should essentially look at both pictures. One is related to transactions and financing activities that took in the quarter. The other is the true look at the business, and we should focus on the one that is a true look at the business.
John, you mentioned this has been a transformative quarter in terms of scaling the business. You're now working on multiple projects in unison, which is very exciting for Soluna. You've now wrapped up Dorothy 2. Again, we were privileged to go see the bow being tied on that one, so to speak. What's your next main focal point for the company?
Big focus is CODI 1. That's we have a concept at Soluna called Priority 1 or P1. Our P1 is CODI 1, and that construction is already underway, going very well thus far. Concrete pads are down. We've started receiving the containers from Galaxy that are being deployed at the site. I think I put out a picture of our huge medium voltage switchgear that's being installed that will provide the management and electricity. The team is heading down there to set up the network and security systems to allow Maestro to manage the facility. We're going to be focused on AI. So Kati 2 and Grace are two projects that are AI related that we're focusing on pre-construction and engineering, what's called design engineering activities, where we're designing the facilities so that we can create design and engineering packages that can be provided to customers that are looking to partner with us and lease these sites, so they have a good sense of when the site will be delivered, what the total square footage, energization capability will be, and the timing that allows them to then bid on the price, on the project, if you will, their interest. And so we're working really hard with a great partner that's fantastic in this space on the Kati 2 project in that regard. We're also looking to find ways to make Kati 2 bigger. I hint to that in one of my presentations. We have this concept of clustering that's starting to occur. Our pipeline has gotten so big now and continues to grow, where if you look at the state of Texas, even though it's quite big, as you said, Bryce, there's lots of wind farms all around there, and a lot of them are our customers or our power partners, if you will. And because we end up signing multiple projects that are now becoming sort of in the tens of miles from each other, so let's say 30 to 100 miles from a particular project, we can start to actually leverage that clustering and create much larger campuses, and that's exciting in the standpoint of AI. And Project Grace is a pilot we're putting together. The purpose of that site is twofold. One is just like the renewable energy space has this sort of unspoken problem about wasted energy, and you don't see it until you're sort of driving out there and seeing half the turbines not spinning. AI has a dirty secret too. It does have a challenge when it comes to power consumption that can fluctuate up and down. Huge swings. You're talking about 30 megawatts can suddenly sort of come down in a few minutes or so, and that can have a very negative effect on the stability, the grid stability. And the grid is already seeing that, and that's starting to raise concern about the interconnection of some of these projects. So we signed an MOU with a technology partner that we're going to be working with. When we ultimately announce it, you'll see that it's a well-known brand name that is helping us to design a solution to that problem. And that will be tested at Grace. And there are a number of very large hyperscale customers that are looking to address this problem with their designs. We're building it around an NVIDIA reference design. And once we perfect that, the goal is to scale that and use it in our future facilities as a unique value proposition, if you will, as customers look at sites to deploy their equipment. And we'd like to use that at Kati 2 and the sites beyond that. And then, of course, we are looking to advance our development pipeline. So we've got Rosa, Hetty, Ellen, Annie, Faye, Gladys, all moving through their shovel-ready statuses. You'll see in the coming weeks announcements about those, so stay tuned, and you'll start to see some significant developments on those. We're starting to see advancements of those projects accelerate, which will then unlock a whole new set of potential investments, capital deployment, and construction. So it's a very exciting time for us. As you can see, I'm just hitting on a short list of things that are top of mind, P1, but there's a much longer list than that in terms of what we're focusing on right now.
We were lucky to see the space you allocate into Project Grace at the Silverton site there, and that will obviously help you in your strategy to sort of like start delivering on scale once you've got up and running, and clients can see that you're operating in the space like we've seen other peer miners do. It's obviously a great way of showcasing the skill set and learning at the same time.
Exactly.
In Kati 1, you've mentioned there obviously that equipment from Galaxy, which is arriving as we speak, very portable, and we noticed that from many of the sites that we went to how portable some of these sites are. In terms of that first phase at Kati, which is 83 megawatts, Are you looking to, use that site? Can you use that site for wholly hosting, or is there an opportunity to put hosting and HPC in one of the phases, or what does your mindset work on that sort of strategy?
So Kati 1 is all hosting. So that's 83 megawatts is our plan to do all hosting there. And then Kati 2 we're developing it for AI. So 83 megawatts plus for AI or HPC related development. So if you fly over the Kati site, there are really two development projects, if you will, underway, one under construction and the other being designed and developed and so forth. The reason we do that is, and that's on purpose, we will likely do that for some of our earlier projects here because our power partners want us to solve the problem. They don't want to have turbines not spinning for 2.5, 3 years, as it takes to build out these AI capabilities, let's say, for example. So we need to deploy Bitcoin so we can demonstrate we can start to consume their power very quickly. We also want to continue to grow our revenue and profits because that cash can be used to finance the development of more projects and AI opportunities. And so that's why there's sort of like that dichotomy, if you will. As we get more AI spinning and we start to build a sales and development pipeline around AI, we'll start to rethink some of those projects. Maybe they can start out as AI 100% from day one, or maybe they'll be Bitcoin hosting 100% from day one. We evaluate each site. If you look at our sort of pipeline analytics slide that we put in all of our materials, it's the one with the colorful circles. At the bottom, you sort of see a roadmap that takes you through the journey that every project goes through from the moment we start a curtailment assessment, which allows it to join the pipeline, all the way to shovel readiness. Right around the point where we've signed the PPA and we have control over the land, then we do a feasibility analysis in addition to all the other engineering stuff that we have to do and studies that we have to do for planning. We do a feasibility analysis. Can this be a good site for AI? And once we determine that it scores very high for AI, the next question is how much of it will be AI versus Bitcoin. And we're doing that across all of our projects. And we do it right around that stage where we have the PPA and land control is when there's a firm that we use that comes in and goes through like a 15, 18 point process for analyzing the site for HPC AI feasibility.
Just one follow-up before I hand you back over to Bryce. You mentioned the second phase at Kati being used for HPC deliverable, and
yes,
that's interesting because having sort of mining on one phase and AI on the second phase, you might have opportunity to increase mining power when there's not as much power being used as you already highlighted. The usage in HPC, it isn't linear. It's volatile. So is that something in your thought process, having those two strategies working side by side to basically sort of like increase the power towards mining when it's available?
Yeah. So when we design our sites, we try to look at it from multiple different lenses, Anthony. On the one lens, remember, we have multiple products as a company. We're providing multiple services. On the one hand, we are providing a curtailment mitigation service to the power plant owner, the IPP. So Bitcoin mining allows us to do that very fast, and we use this flexible nature to deliver that service to them. The other is we're providing a service to the grid. We're introducing load in a place where load doesn't readily exist, and providing essentially a demand response capability to the grid where you can scale back or scale up the flex of the data center. And that behavior is important to our business and our business model to deliver that to the grid because we can drive revenue there. And we have done that at Dorothy, and now that's going to grow. We want to do that at our other sites too. And then the third is we need to be able to provide a site where an HPC customer, AI customer can deploy a fairly large facility that can be on persistently. But if the grid needs to trigger them to come off, we can have the Bitcoin side be that flex, if you will. So by having them together, the grid actually enjoys the fact that it's still a flexible load back there, if you will. And so when you put all of those things together, it starts to introduce a strategy we think will be very important for how we execute on the future of our business. We'll continue the sort of very clear strategy of monetizing our power both on the Bitcoin side and AI side, something we call renewable computing. And we think by taking this bipolar approach, if you will, or dichotomy, we can achieve some things that others can't.
Thank you.
John, with so many companies now wanting to partner or have interest in this renewable behind the meter strategy, what kind of a screening process do you guys use on your side now? I guess the tables have almost turned. You've proven you can scale this, you can replicate the model. Now you're getting inbounds. How do you manage all those inbounds?
So we do have a process that is tried and true at this point. We do something called a curtailment assessment. And that's where we ask the power partner to provide us with minimum 4 years worth of data for their project. And then we put it through an analytics engine that essentially analyzes the power production of the power plant, behavior of the turbines. We can actually tell how well their site runs. And then we can tell a sense of the magnitude of curtailments. And then what we do is we create essentially a model of a data center that's big enough to consume all of the curtailments, but small enough essentially to stay under the power curve, so we can have very high uptimes for Bitcoin. And then now we also analyze, what the potential production is or flow for an AI site. And then we look at the nodal prices in that area, grid production, the load zone, which retail company is located there, land sites. There's a whole series of things that we analyze. And then we essentially score the site. And if we think we can really help the power plant company, then we give them an offer to deliver the solution for them, if you will. If we think that we can't, we typically will say, we don't think we can help here. And we've done that in the past where it's just not a good idea for us. It doesn't give us the power price advantage that we want. and the location might, work against sort of some of the things we're doing on other projects. And so we will score it fairly low and encourage the power partner not to work with us or take a price that, may not be attractive to them, to encourage them to sort of work with us. And that seems to be working fairly well for us. And what that does is it kind of weeds out folks who may not be serious. They're just kind of testing us. And it allows us to build relationships with power partners that have multiple assets. It's very rare now that we sign a deal for just one project with a power partner. Typically, we're signing multiple deals, which is why the pipeline has been able to grow so fast. And those deals convert now. Before, we would spend a lot of time doing these assessments, and they would kind of languish. It's not like they died, but they didn't convert. And all of a sudden, there is an urgency coming from these IPPs that they see that this is a real solution. They see that we're growing. They've heard from other power partners about working with us. And so they really show up saying, here's our assets. We want you to work with us. We already know who you guys are. Tell us what you can do, and tell us how fast you can do it. So it's a very exciting time for us.
One of the things in Texas that is short for AI HPC is the power, which you talked about there. Now, you mentioned Project Grace will be the sort of like the proof of concept in terms of delivering this project. Are you having discussions because you have this significant amount of power pipeline? That's the big shortage. Are you still having conversations with potential clients for HPC delivery, or is it a case of let's get Project Grace up and running and let's have more meaningful conversations when we can understand A, actually, can we deliver this profitably, and B, prove that we can deliver it?
No, actually, we are talking with customers every day. If you look at Project Kadi, I don't think that I can say the number of customers that have sort of put their hat in and say we like
Right.
this site and we want it. But I can tell you it's not a inconsequential number. Let's put it that way. And that's why we said, okay, now we've got to prove to them that we can actually deliver on that, right? So they're saying, show us the plan, right? And so that's why we signed an MOU with a development partner with deep experience in HPC. We'll announce who they are. There's a very specific timeline we've put in to share that with the market. But these are deep experience, many gigawatts of projects that they've deployed and built for some of the largest hyperscale companies in the world. And so we just have to do what you're supposed to do when you're doing HPC AI, right? You have to not just show up and say, hey, I've got this land and I've got power. You want to lease it? It doesn't work like that. You have to show them a package that says, this is the data center we're going to build here. This is what it looks like. This is the design of it. This should meet your requirements. Because one of the first things we do in the call is we go through a screen with them of like, what are your requirements? Timeline, power density, square footage, 2-story, one story, backup and resilience, T3, T4 requirements. We've had some customers ask us for, shall I say, military/government level security in the site. These types of requirements can then flip into a very specific design that meets the broad spectrum of those, and it gives a timeline. This is when you can deliver the site. This is what you'll need to put down and what the lease will look like. And we have to be able to do that so that we can price the deal appropriately so that we make money and it fits the market. No matter what folks that are listening to this and our peers that have announced deals, they've all had to do this, right? So if you look at, some of our peers who announced maybe a year ago or a year and a half ago that they were going to be getting into HPC AI, they didn't announce like 2 months later that, they had a lease, right? There was time that passed because there's a lot of work you have to do to make the site package ready for the customer to sign up. So those conversations are happening every week where we're tweaking the design, trying to understand the requirements a bit better so that we can create that product, if you will, that the customer would be signing up for. And Grace is just a technology. The way to think about Grace is a technology pilot where we're going to test a very specific design that solves for this intermittent power issue, which is even more challenging potentially when you combine a data center that has that behavior with a generation facility. So it's one thing if you just connect it to the grid and it's causing this frequency issue. If you connect it to the grid and it's connected to a power plant as well, and there's this frequency issue, you really got to sort of think about that solution. So that's what Grace is focused on.
Yeah, I mean,
I'll put out more. Sorry, I'll put out more about that. In the coming weeks as Grace matures and we sort of announce the partnership, it'll become clear. But the key thing I want to get out to folks is, when Soluna says we're working on AI HPC. It's not that, we're just sitting here and, waiting for a customer to go sign an LOI. That's not how, we take our process and model very seriously. We do all of the work. We bring in expertise to help us to do that. And that's what we're doing on Kali 2.
I mean, you have been planning, the planning concept of Grace for a while. We've talked about it on previous podcasts. Are you getting sort of like, an air of feeling a little bit confident, the fact that we're now starting to see deals being signed in the space?
Mm-hmm.
And yes, they've taken a long time for some of those to come to fruition, but does it give you a sort of an air of confidence that you're approaching this in the right way, and the expectation is you're going to be able to deliver on this in the future?
Yeah, that's a great question. Yes, I would say yes. It feels like, let me give you an example. I was at a conference, I want to say a couple of months back, but it might have been like a few weeks back because this past quarter has just been so dense. At the conference, we were talking about, it was myself representing Soluna, of course, and another Bitcoin miners on the panel, and it was a panel about AI and Bitcoin AI conversion and what's happening in ERCOT and everything. And there was a question that, is AI going to come to these like remote locations, in the grid, and or is it more apt to being in more population dense areas and so forth? And there was one of my peers who says, well, AI in West Texas is probably a dream, and that I just don't see that happening anytime soon. And I didn't have the mic, but I aggressively asked for the mic, and I basically said, look, while that is a perspective, you really have to just take a step back and just do a first principles look, right? There is overwhelming demand for power. Time to power is the number one thing driving these investments. As of the last few quarterly announcements, I think the total is somewhere around $300 to $400 billion that's going to be spent over the next couple of years into 2030. And power is at the center of that. It's not chips anymore, right? You've even seen Microsoft say that. It's about power. So if it's about power, you're going to find all of the places you can find power, even though it's not your normal place for looking for power, because you have to hit your mandate, right? You've got to grow. Customers are demanding you deliver AI to them at scale. And so all of a sudden, places that would normally not be a place where a hyperscaler would go, they're going to start going there. And that was, like I said, at least a couple of months ago, maybe 6 weeks ago, and you saw in the last few weeks there were announcements where peers of ours are buying sites in West Texas. They're signing deals in these remote locations, and that's because pain. When you have a pain and there's a challenge, innovation results, right? You've got to solve for that pain, and companies will innovate, and they're going to look for companies that are innovating in ways to deliver power faster. And that's what we've been working on for 8.5 years. And so that expertise, we believe, will make us attractive to partners to bring their workloads to our sites. And we're working with every fabric in our body to make that true.
Hey, just a couple more, and I think we can let you go for the day here, John. One specifically from the audience wanted to know your outlook on the backup battery infrastructure and deployment in Texas, being that you're so involved in the renewables, obviously the power generation side of things. How do batteries play into your strategy?
We're not looking at batteries right now. We are mostly focusing on backup generation. So for tier 3, tier 4, you'll need 5 nines. We have a grid interconnection. I keep having to tell people that and teach people that just because we connect into renewables doesn't mean we're not on grid. We're actually on grid, and we have a power generation right next to us, which is even better. But if for some reason we have to come off grid, we need a way to power the entire facility. And generally speaking, battery is acceptable as part of the design, but it's not kind of like, I'd say it's not the standard that kind of meets customers' requirements. You basically need, gas-fired generation in the back there, or diesel, which is, in my opinion, not as sexy, but that's kind of like the state of the art, if you will. Batteries are becoming, starting to play a role to help with some of the power smoothing I was talking about, though it doesn't work as well because batteries need to discharge very often. So you're probably going to see a lot more designs that look something like this, as things scale here and as we fill out, our designs. You're going to have a connection into the power plant, into the grid. You'll have your traditional Jennies that are powered by advanced systems like gas. You might start to see H2 powered generation, and then you're going to see batteries sort of supplementing some of that as part of the design, but we don't see it yet being the hero, if you will, for backup.
Makes sense. And the final one for me, then I'll pass it to you, Anthony, for any closing thoughts. Authorized shares. You guys just got the vote pushed through. You increased your authorized shares. You made it very clear through your social media posts and talking on discussions with us. This does not equal dilution. This just sets the company up for potentially future levers or opportunities down the road. Can you talk to us now that the vote's behind you? How do you feel with the outcome, and what does this position Soluna for moving forward?
Well, we're very happy with the outcome. We had a very healthy majority vote for the proposal, and we as management and the board were very happy to see that. It did pass. We now have authorized shares in the 375 million, give or take. There was some fear that we were going to immediately issue 300 million shares. That was not the intent, and nor have we. The intent is to use that capacity to raise capital to deploy into these projects. And when we talk to AI and HPC folks about our sites, we have to be able to look them in the eye credibly and say that we can build this site. We can build if it's a 100 megawatt site, you're talking about a $1 billion project. And so if you assume call it 70-30 split, right? So if it's a really high credit worthy customer, you're probably going to get maybe $700 million of debt to support that. The company still needs to be able to show up with $300 million in cash. We intend to do that by raising a portion of that at the project level in equity, like we've done in the past. In fact, we're using the same muscles we've been building on the hosting side to approach the AI side. And what's exciting is the AI side has lots of capital available for a well-established project, because it's not like the industry has never built data centers before, right? They've been doing this for years. This is just a new form of data center for AI. So there's plenty of capital interested in investing in these projects. And then we've got to be able to put a portion of that. So let's say in $300 million, maybe we put up to 100 million of that 300 million into the project, right? And we've got to be able to credibly show our partners that we can raise that capital. Well, with 75 million shares in an authorized pool, with only less than 10 million shares available on that wasn't a very credible position we'd be able to take. And as I just said earlier, we were having conversations with these customers every day, right? Every week we're talking about these sites, and we've got to be able to demonstrate to them that we can execute on a plan like that. And so this tool, which I thank the shareholders very much for agreeing to, now changes the complexion of those conversations. They see we have the capacity, we've proven that we can raise capital, we're showing that there's interest from other project level JV partners to do that. We have a real HPC partner that knows how to build data center sites, and we know power that have access to gigawatts of it. It just puts together a much stronger story for us as a company. And that's also true on the hosting side, Bitcoin hosting side. We have partners now that are coming to us and planning ahead, where they're not saying, hey, let me rent a portion of Kadi 1, which obviously they are and doing, but they're like, we want to do 200-300 megawatts worth of projects with you. How do we plan, and can we start to sign, deals that give us access to projects in the future? And we've got to be able to show that we can not only execute on getting those projects to shovel ready, but we have the capital to build them. And by combining that with our Generate facility, the Spring Lane facility, but also having our own equity so we can own more of these projects, and we want to own 25% or more of them, creates a much more credible conversation with some of the largest miners and OEMs in the world right now that we're in conversations with.
Yeah, my last question takes us back to the mining strategy, and obviously we were at the site there at Dorothy 1 and 2, and a great list of partners you got there hosting. In terms of Bitcoin mining, we've asked this to a number of CEOs over the last week or so, because we focus on the hash price on a regular basis through our podcast, and at the moment I think it's dropped below 40 now.
Yep.
You did increase your self mining fractionally in terms of percentage wise quite big, but in terms of self mining itself, probably just over 100 petahash I think it was during the last update. But your focus looks to be driven by the hosting side. Are you seeing the hosting as a more profitable service, especially as we've seen the Bitcoin price come back from its 126,000 highs into that sort of mid 90 range?
Yeah, hosting is the core of our business. We'll be clear about that. We do have this joint venture with Navitas, and we are being a good partner in making sure that we continue to upgrade the machines. If you're in the proprietary mining business, you've got to make sure your hash rate is commensurate with sort of the hash price levels and what's happening in the Bitcoin network. And so those investments we started to make as we had more access to capital, and they did as well. And we started deploying that, and you sort of saw that grow up. But we just finished Dorothy 2. We are now north of 100 megawatts of our footprint being hosting, right? That's more than the majority of our footprint. That will continue to be the case. We will continue to grow that over time. All our future projects are currently slated to be a combination of Bitcoin hosting and potential AI, depending on the scoring. And so for us, Bitcoin hosting is the business, and it is the more profitable side, the more sustainably profitable side. And with the partnerships we're signing with some of our new partners, we can see more visibility into the growth of that business going forward. So that's our main focus right now.
And you can see the sort of like, as the eyes of some of these peer miners start remaining towards HPC, that might give you even more opportunities. If they've got fleets that they then want to say, well, I don't really want to get rid of the mining aspect, where can I put them? Hey ho, Soluna Holdings is there with a number of projects coming up that might just fit the time frame.
Exactly. That's what, well, I mean, we don't have to talk theoretical, right? Like that's what happened with Galaxy, right? That's what Galaxy did. They looked at this and says, we're not exiting mining, but we just can't have mining at this site anymore, right? What are we going to do? And the first name that popped in their head was Soluna, and that feels great. We have worked really hard to get to a point where we're the first name that comes up in a strategic conversation about where to deploy mining at scale.
Thanks, John.
I was going to say the story's really coming together nicely here for Soluna Holdings. So I'll give you the opportunity to close out. Congratulations on a great quarter, and thank you again for letting us go see the site up close and personal there.
Thanks, guys. And again, thanks so much for visiting. Your next trip, you'll have to do Project Kadi. And that's actually a cooler site because you can actually go to the beach after. It's about an hour drive away. You can get to South Project Island and dip your toes in the 80 plus Fahrenheit waters. So that'll be the next trip for you guys. So I'd like to close by making two, I guess, personal appeals. One is to our shareholders and investors. I want to thank them for their patience and support. I want to thank them for the tools that they've given us to responsibly scale the business. We spent a great deal of time creating content to help our shareholders understand our business, and I want to appeal to you to please review it, please read it multiple times, do your own research, and the more you can understand what we're trying to do here and what we've accomplished, what we've executed on, the more conviction you'll have in your ownership of our stock for the long term, and understand that we're very aligned with you as shareholders to build a great company. And that's what we're focusing on. And I want to talk to my team right now. Our success over the past 3.5 years has all been due to your unwavering resilience, focus, and execution. When the world was saying that we would not make it, or a host of other, I'd say, really bad things that I won't repeat, you quieted the noise and you kept your heads down and you just kept pushing. And it's an honor to be your conductor, and just keep making beautiful music.
There you go. I was going to say, you keep pushing, and we're so excited to watch from the sidelines here. Phenomenal job what you guys are building, John. Thanks again for the time. If any of you are watching, maybe you have additional questions that weren't able to be covered here. I know you do an AMA every month, John, or feel free to leave them in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.